All right, well, that's the handover coming in internationally. When we talk about Indian bonds, the 10-year treasury yield that also spiked up above 7 yesterday. But let's also talk about another commodity in focus, and that is oil, because oil prices eased in early trade yesterday, extending their losses from the previous session when prices fell to their lowest in 4 months as investors worried about supply ticking up later in the year. Brent crude futures fell 20 cents or almost 0.3% at $78.16 a barrel. Brent closed below $80 a barrel for the first time since the 7th of February after falling more than 3% on Monday. So continued to build upon those losses. That's what the Brent was up to yesterday. Brent fell for the sixth straight session, lowest in 4 months amid concerns that the global supply could increase later this year. Now, US WTI crude futures also the east 17 cents or 0.2% to $75 a barrel. It had also settled near a 4-month low on Monday after sliding more than 3.5%. Now, remember the Organization of Petrol Exporting Countries, which is the OPEC, and allies led by Russia, together known as OPEC Plus, on Sunday agreed to extend most of their oil output cuts into 2025, but they've also left room for voluntary cuts from 8 members to be gradually unwound from October onwards. The signs of weakening demand growth have also weighed on oil prices in recent months, with data on US fuel consumption in focus. Now, the average gasoline price in the United States declined 5.8 cents per gallon to $3.50 per gallon on Monday. The US government will release inventory and product supplied data today as well. And product supplied, which is considered a proxy for demand, will show how much gasoline was consumed around the Memorial Day weekend, the start to the US driving season. So lots in focus when it comes to both of these indices. You have Brent as well as WTI continue to build on losses that we've been seeing over the last couple of sessions here.
Well, absolutely, and it does look like the OPEC Plus has left the bearish genie out of the bottle, so that is what we've seen play out. But on to some more global updates then. We're eyeing this morning, job openings in the United States have fallen more than expected to the lowest in more than 3 years. Signs that the labor market is softening to aid the Federal Reserve's fight against inflation. Job openings were down to 96,000 to 8.059 million in April. This is, remember, the lowest since February 2021.
Alright, shifting focus then, car maker Toyota will recall over 100,000 SUVs and pickup trucks in the United States over engine failures. The recall includes some Toyota Tundra pickup trucks and Lexus LX600 SUVs equipped with the Japanese automaker's V35A 6-cylinder engine.
Alright, then, and staying with the auto space, Ford has reported an 11% growth in sales for the month of May on a year-on-year basis, largely aided by a robust demand for SUVs, pickup trucks and hybrid vehicles. And demand for crossover SUVs and pickup trucks has also helped US automakers post stronger sales over the past few years as Americans prefer the flexibility offered by those vehicles.